Hello future CAs, welcome back to my channel again, your one-stop guide for everything related to CA exams. If you are new here, I am Pooja, a chartered accountant. I have an experience of working for Ernst & Young and KPMG, and I help CA aspirants like you succeed with practical tips, strategies and support. So this is the second episode of the series where we'll revise the true or false question from the Test Your Knowledge section of CA Foundation Accounting. It's perfect for quick revision, whether you're traveling, taking a short break, or just want to brush up your concept in a few minutes. So guys, if you are new to my channel, please subscribe. Every subscription works like a motivation for me and it also makes my day. Guys, when you visit my channel, do check out the playlist section. You will find several curated playlists for the CA Foundation exam. Make sure to explore them and watch the videos in order to get the maximum benefit from each topic. So today we'll be solving the true or false question from chapter number 1 Theoretical Framework Unit 2 Accounting Concepts, Principles and Conventions. Question number 1. The concept helps in keeping business affairs free from the influence of personal affairs of the owner is known as the matching concept. So each true or false question is for 2 marks in the exam. So along with writing whether the statement is true or false, you have to also give 2 to 3 sentences of reasoning. Marks are allotted for reasoning as well. So the concept described is the business entity concept in the statement and not the matching concept. According to the business entity concept, the business and owner are treated as two separate entities and their financial affairs should not be mixed. The matching concept, on the other hand, relates to recording expenses in the same period as the revenue they help to earn. So hence the statement in the question is false. Question number 2. Entity concept means that the enterprise is liable to the owner for capital investment made by the owner. According to the business entity concept, the business is considered a separate entity from its owner. Therefore, any capital invested by the owner is treated as liability of the business towards the owner, as the business owes that amount back to the proprietor. Hence, the enterprise is liable to the owner for the capital investment made by the owner. So, the statement given in the question is true. Question number 3. Accrual means recognition as money is received or paid and not of the revenue and cost as they are earned or incurred. This statement actually describes the cash basis of accounting and not the accrual basis of accounting. Under accrual concept, revenue and expenses are recognized when they are earned or incurred, regardless of when the cash is actually received or paid. So the statement given in the question which mentions that accrual means recognition as money is received and paid is actually cash basis of accounting and not accrual basis of accounting. Hence the statement in the question is false. Question number 4. The conservatism concept states that no change should be counted unless it has materialized. So the statement in the question actually describes the realization concept and not the conservatism concept. According to the realization concept, revenue should be recognized only when it's actually earned or realized. Whereas the conservatism concept, on the other hand, advises recognizing expected losses but not anticipated gains, ensuring financial statements are not overstated. Hence, the statement given in the question here is false. Question number 5. The concept of consistency implies non-flexibility as not to allow the introduction of improved method of accounting. The consistency concept means that the same accounting methods should be followed from one period to another to ensure comparability. However, it does not mean rigidity. A change in method is allowed if it results in more accurate or reliable financial information, provided the change and its effect are properly disclosed. Hence, the statement given in the question, which states that the concept of consistency means non-flexibility, as it does not allow the introduction of improved method of accounting, this statement is false. Question number 6. The materiality depends upon the amount of item and not upon the size of the business, nature and level of information, level of the person making decision, etc. Materiality does not depend only on the amount of an item. It also depends on various contexts, such as size of the business, nature of the item, and the needs of the users of financial information. An item that is immaterial for a large company may be material for a small business. Hence, the statement mentioned in the question is false. Question number 7. Accrual basis of accounting is the method of recording transaction by which revenues and cost and assets and liabilities are reflected in the accounts in the period in which actual receipts or actual payments are made. The statement mentioned in the question describes the cash basis of accounting and not the accrual basis of accounting. Under accrual basis, revenue and expenses are recorded in the period in which they are earned or incurred, regardless of whether the cash is actually received or paid. Whereas in cash basis of accounting, the revenue and expenses are recorded when the cash is actually received or paid. Hence, the statement mentioned in the question is false. So that's it guys for today's episode. I hope this quick revision helped you recall all the key concepts from this chapter. Don't forget to like and share the video and also subscribe to the channel for more such short and effective revision sessions. All the best for your exam. I will see you all in the next episode.